I'm Corey Johnson, and this is Bloomberg Technology. Coming up, the Snap IPO Roadshow makes its final stop for the big IPO plan for later this week. How the startup plans to validate its valuation as investors question its growth. Plus, Warren Buffett takes a bigger bite while the guy who doesn't own an iPhone has purchased more than 100 million shares of Apple. And SPACEX shoots for the moon. Elon Musk says 2 unnamed citizens have put money down for a lunar mission. First to our lead, as Wall Street prepares for the first tech IPO of the year, Snapchat's management team makes its final road show right here in San Francisco. Executives are pitching the company to investors, but the progress of Snapchat's business is slowing. Check this out. Snapchat has 158 million users, but the pace of user growth has slowed to 3% sequentially. Joining us right now, Sarah Fryer, a Bloomberg Technology reporter who covers all things Snap related. This user growth issue to me is one of the biggest issues with this company. When you look at the sort of sequential user growth, which I think is the right way to do it, the company says it doesn't see seasonality. It's really slowing down.
It's something that's been a top question for Snap executives at the Roadshow. And in New York, a lot of the people we talked to who went to the Roadshow expressed skepticism about Snap's answer. Their answer to the user growth issue was that it was due to some issue with their Android product. But Snap investors, or potential investors I should say, are worried that maybe this is because Instagram copied Snap's product in August.
I mean, stories, right?
Yes.
Exactly when stories happen is exactly when their user growth starts tanking.
Sounds fishy, right? So that's one thing that people worry about. Snap at their roadshow said that they see Instagram as a slightly different use case, according to the people we talked to who went. That didn't seem to necessarily calm their fears about growth.
Where were they here in San Francisco?
That was at the roadshow in New York.
But they were here in San Francisco today, meeting with investors, trying to pitch that story. It's a lot of stock they're trying to sell.
It is a lot of stock, but there's plenty of demand. I mean, this is the first big tech IPO in a long while. Right. The last really big one was Twitter, and these are companies that people wait a long time to get into. And if it's a Facebook situation, even if it has a rough and tumble first year, it could be incredibly good opportunity over the long term. If it's a Twitter situation. It's
hard to imagine with these negative gross margins that there's a great business waiting to be had there. I finally started building a model in this company this weekend, and what I came with this approach I don't usually do, but I looked at the cost of goods, right? There's money they spend with Google, the money they spend historically. And if you look at and I put together a chart to show this, it's the cost of serving each user. It's not that complicated, it's just the cost of goods sold compared to how many users they get. And what you see is over time, the opposite of what you'd want. They're spending more on each user every quarter instead of less on each user, which you'd expect them to have with scale. But since they don't own their own servers and things, since they rely on Google, that seems to be an issue for them.
It's definitely an issue in the minds of investors. Snap sort of presents it as they just have a different cost structure that perhaps we're not as used to. They're not in the business of building servers.
Right.
So that's their response to that. But the question is, are they going to be able to increase the amount of money they make off of each of the? Are they going to be able to scale their advertising business to the point where it actually becomes a profitable business?
And what's the timing of this deal?
What's the timing of the deal?
Yeah.
So we're expecting it to price on Wednesday and list on Thursday. So
price Wednesday, trade on Thursday. Should be solid excitement. I'm sure you and Alex Brink are all geared up to cover for us at Bloomberg News. We'll have you come back on and
absolutely.
Great stuff. Sarah Fryer from Bloomberg News. Thank you very much. All right, another story we're watching, Berkshire Hathaway. You may have read the annual letter like I did this weekend with a great thrill. Interesting, within that letter, we find out the company doubled its stake in Apple. Chairman Warren Buffett says Berkshire now owns 133 million shares. Some were bought, perhaps by his deputies. Bloomberg News reporter Catherine Chiglinski joins us right now from New York. Catherine, is this Warren Buffett or is this Todd Combs and Ted Weschler, the other money managers underneath the Berkshire umbrella?
Of course. So Buffett went on CNBC earlier today to talk about the investment in Apple. He more than doubled his stake in the technology company, which is a lot more than we had learned at the end of December. He mentioned that while he manages the bulk of that investment, it was one of his deputies that picked the other bit. That's interesting because Buffett himself is pretty averse to technology stocks. He actually showed his flip phone on TV today. He's not really that kind of into technology, but it definitely shows the growing influence of Todd Combs and Ted Weschler, his two investment deputies. He didn't clarify which one it was, but it's definitely kind of an interesting sign that now he's willing to kind of plow into their company.
Well, it's interesting to me because when you look through those investments, one of the things I noticed in the letter was of all of the stocks they listed, whether it was USG, the U.S. Gypsum business, or Southwest Airlines or Bank of America, or his two pure tech holdings, Apple and IBM, the only loser of all of his holdings is IBM, a company that he's lost money on, a name that he's been invested in for many years, well, probably 3 or 4 years. But there was no commentary in the rest of the letter about that holding.
Yeah, so he's definitely taken some heat for kind of being so bullish on IBM for a while. But that stock has done much better. It rallied the past year, and especially since the election, he actually started to exceed the cost of purchasing that stock. So, while he definitely took some heat when it wasn't doing well, sticking with it proved okay. So I think it's interesting that now he's like, okay, IBM was good and Apple might be kind of even better.
It is interesting that we've seen so many tech leaders over the years, the Google founders in particular, who seem to have a great love of Berkshire Hathaway and really understand that business, regardless of its lack of sort of overt technology. But if you look at the railroad, if you look at so many of the holdings, even See's Candy, like all these companies are being transformed by technology, and surely Buffett knows this and is spending this money to make these businesses better through technology.
Definitely. It's one of those things of you can't avoid that conversation forever. He actually mentioned on CNBC today, his vice chairman, Charles Munger, kind of questioned some of his bets a little bit. And he said, I can't avoid things forever. Things are changing. That does happen. And, I think that's what he's saying kind of with some of these different bets. With Apple and with the airlines, he said airlines, they had a bad first century, but they're doing better now. And I think he's willing to change his mind.
Airlines, that's one he's always hated and regretted. We'll see if it changes this time. Bloomberg News reporter Catherine Chiglinski, thank you very much.
Of course, thank you.
All right, coming up, chief executive behind Grand Theft Auto opens up about President Trump's expected tax overhaul and gives us a look at just how complicated taxes can be for companies like Take-Two and other businesses in technology. This is Bloomberg. SoftBank is said to be working on a merger with one of its satellite companies, OneWeb, and Intelsat. Remember, SoftBank invested $1 billion in OneWeb but back in December. This, according to a person familiar with the matter, said the talks could still fall apart, and OneWeb has other options besides Intelsat. The transaction could be valued at $18 billion. If successful, it would be announced when Intelsat reports results on Tuesday. Well, President Donald Trump planning an overhaul of U.S. tax policy with details expected in his speech before a joint session of Congress Tuesday. But when it comes to the multi-billion-dollar video game business governing what's made here versus what's made there, it ain't easy. And changes in tax policy could have some unintended consequences. That's something Take-Two Interactive CEO Strauss Zelnick has spent a lot of time working on.
I think the biggest opportunity on tax policy is a repatriation of cash that is trapped overseas. And to be clear, that's not a Take-Two issue. As it happens, 90% of our cash is actually domestic. But it is an industry issue, and it's a broader issue for our economy. But
historically, when we've had the few tax repatriation holidays, in the past, that money's gone to stock buybacks, and it's gone to special dividends. And it hasn't, one could argue that it trickles down to the economy. One can also argue that it doesn't, but it hasn't gone into hiring, it hasn't gone into R&D, hasn't gone into real spending.
So this administration has talked about job creation, and I think it's a primary goal of the administration. It seems to me you could tie favorable treatment to repatriating trapped cash to whether that is invested in the economy as opposed to invested in buybacks or used to pay dividends. And you could tie the two in the same way that like exchanges in the real estate business have obligations and timing restrictions in order to generate a tax benefit.
There, as it relates to the gaming industry, the border tax rules are really interesting to me, at least, because of the way you guys develop software. You might develop some of the software in Canada, a lot of the software in the U.S., some of the same piece of software in in the UK or something in a global development system. But then how do you tax what's made in Canada versus what's made in the US if it's all lumped into one game?
Well, I think it's certainly possible to do it. The question is it something that benefits our economy? And generally speaking, erecting trade barriers is not something that generates value in our worldwide, utterly matrix-engaged system, not just for our business, for all businesses. However, our industry is especially interested in low or no barriers to trade because we're an exporter. We're one of America's largest exports, entertainment in general. I think we're the second largest export after aerospace. So speaking from our own industry point of view, having as few barriers to free trade as possible benefits our industry and certainly benefits our country. And I think from our point of view, we want people working at their highest and best opportunities, and that means that America's a knowledge economy, America's a trained economy, and we like the fact that we have worldwide engagement and we can put jobs where they belong. We're a big domestic employer, of course.
And it's interesting too because as the products are more digital, I mean in the case of yours, of course, games, but you can play that out to entertainment, you can play that out to movies and so on. As they're increasingly digital, less DVDs, less cartridges, there are no cartridges anymore in the gaming business, what you're selling is bits and bytes and lines of code. So where that code is written may determine if it's made in America or not made in America and how the tax policy works. It's got to be really confusing for Congress and the White House to figure out what that means.
Well, again, it's doable because there are certain rebates, for example, that are triggered in foreign jurisdictions, and there are rules around what constitutes local work. So I have no doubt that one could make rules and make those rules work. The question is, would it enhance or detract from productivity, achievement, and the overall macroeconomy? And I'm suspicious that we can be so smart in centrally planning trade restrictions that it's a net positive. Generally speaking, free trade is a net positive.
Well, and it also seems that the valuation placed on the IP versus the actual creation of the code is a balancing act. You know, if the IP is owned by a U.S. company, but the code is written in Ireland, where is the work and where is the value, and how should something be taxed when it's exported?
All good questions.
So how do you help Congress figure that out?
I think that we encourage Congress to not to erect trade barriers. And I think that's the focus that we have. And I think at the end of the day, because the sitting legislature is Republican dominated, and typically Republicans are believers in free trade, that ultimately there'll be obviously a negotiation with our president. But I think we'll end up probably in the right place.
Where is most of your development for Take-Two?
Much of it is in the U.S., and then it's all around the rest of the world.
What states and so on?
We have a lot of people in California, we have people in Massachusetts, we have people in Baltimore, we also have people in Canada, and we just acquired a company in Spain. We have a bunch of people in the UK. So some Czech Republic and in China.
So a lot of cross-border development. These are interesting challenges.
Yes, absolutely.
And stuff that's possible now that you couldn't have done before because of the way software is developed in sort of teams working around the clock.
That's right. Working around the clock, cooperating, everything's connected electronically. You don't need to be sitting next to someone to work collaboratively with them.
And I would expect you to think that's going to increase in the future.
Unquestionably, and that's probably the right thing. Again, we should avail ourselves of expertise where we can find it. And if we are smart in America about increasing our engineering talent, which is a big issue here, through improving our educational system and focusing on engineering, then those are very high-paying jobs, and we and all of our competitors are hiring hand over fist. We all have open positions.
Taxes. We're talking about taxes. So I'm channeling my inner Ellen Iverson there. That was Take-Two's CEO, Strauss Zelnick. And then Tuesday, Bloomberg Television, Radio, and Bloomberg.com will have a special coverage of President Trump's address to a joint session of Congress beginning at 9 o'clock New York, 6 o'clock on the West Coast. Coming up, we're going to take you to tech's biggest showcase, conversation of Samsung's European Vice President of Mobile, and how does the company plan to bounce back after its Note 7 SAGA blew up? Because they actually blew up. In the future, we'd like to bring to your attention our interactive TV function. It's right here. You can go to TV Go on the Bloomberg. When you type in TV Go, you can watch us live. You can see some of our old interviews, dive into securities we talk about, look at Bloomberg functions, and you become part of the conversation by sending me an IB, an instant message during the show. Feel free to interrupt me as much as you can stand it, but it's for Bloomberg subscribers only. Check it out, TV Go. This is Bloomberg. Everyone who is anyone in mobile is at the annual Mobile World Congress underway in Barcelona right now. But what you won't find in Barcelona this year, a flagship smartphone from Samsung, which is, of course, the largest maker of phones. Bloomberg's Caroline Hyde spoke with Samsung VP of its European mobile division, Jean-Daniel Ayme.
We've been through a big challenge, obviously, with the Note 7 in the past 6 months, probably one of the biggest challenges in our history. But we've took a lesson, we've took a lot of learnings, and we want to demonstrate today that quality is part of our mission. And I think we, first of all, want to thank all the customers that stayed with us and actually even embraced even more the Galaxy S7 in the past few months. And that demonstrates that we are still well tuned with our customer base. So we owe them more innovation and more quality in the future, and that's what we're showing here today.
Will you refurbish the S7 Note? Will that? People loved it, and many haven't even given it back, even when you've been demanding to be taking it back. Will it go back on the market at all once it's been sorted?
I can't comment on that. I think we're trying at the moment to find the best way to dispose of these products. And in the most responsible way, we're working with the authorities and the partners to find the most responsible way.
I mean, Samsung has always been known to really drive innovation and often iterate, sometimes putting out pieces of equipment maybe early in their life cycle and perhaps before they've been perfected. Would you agree, or do you think that you always wait until it's absolutely at the best possible moment and then release it?
I think sometimes we're early, sometimes we're here to drive the market. I think one of our responsibilities as one of the biggest leaders in this industry is also to drive it forward. And we've demonstrated this when we launched VR last year, actually a couple of years ago, and the big event we had last year to bring it to the next level. Yesterday we also announced, for example, in the VR, the new VR controller, which will bring a new dimension to this VR experience. So yeah, I think we like to say we are early in the technology, and that we are bringing new technologies and then democratizing them to a wider audience.
AR is very hot, VR is very hot, AI is very hot. Is there going to be AI coming into the S8? Can you elaborate in any way on what we should expect and get excited about?
I wish I could elaborate, but unfortunately there are many things in the labs at the moment. You know, we've acquired a couple of companies in different areas, and we usually leverage their technologies to the best we can. We have acquired Harman Kardon a few months ago, and we're now announcing, for example, that we will tune all our speakers on the new tablets with AKG, which is one of the most famous brands in the sound industry. So yeah, we definitely will use all of our technologies.
You say Galaxy S7 is selling well. Galaxy S8, will it outperform? Is it always a belief that it will sell more in terms of quantity?
We are always very confident in our products. That's why we make them so attractive, and we sell them to as many people as possible. I think the S7 demonstrates that the innovation is, in Samsung at least, is relentless. We launched with the tablets yesterday some of the features that we had introduced with the Note 7 with the S Pen, for example, and the S Pen is another manifestation of how innovative we can be. We created the S Pen with the first Note several years ago. Now it's in different devices, it's in the tablets as well, to give more experience to our users across the breadth of our portfolio.
When you don't launch a phone here, everyone then starts to look at who is, and we've been shining a light on LG, on Lenovo's Motorola, on Huawei. Huawei really wants to start eating away at yours and Apple's market share. Does it worry you that they're coming out with these new phones when you haven't today?
We've always recognized that there is competition in the market, and there is. And I think it's good. It's good for the market, it's good for us as well, because it pushes us to to bring more innovation again, to differentiate. It's not just about launching a new product, but serving customers with experiences. So one of the strengths of Samsung as a big company is that we can deliver not only a few smartphones, but a full breadth of smartphones, a full portfolio, because one size does not fit all.
That was Samsung's vice president of its European mobile division, Jean-Daniel Ayme. All right, coming up, we check in with the godfather of net neutrality, former FCC chairman Tom Wheeler. His views on the future of internet regulation as some of his rules are being undone by his successor, Ajit Pai. That's next. Plus, Elon Musk aims for the moon. A surprise announcement that SpaceX chief says he has some, quote, significant deposit for a space tourist mission around the moon. We'll check with our SpaceX reporter later this hour. This is Bloomberg.
I'm Elisa Parenti, and you're watching Bloomberg Technology. Let's start with a check of your first word news. Mexico is warning it will cut off renegotiations on NAFTA if the U.S. imposes new tariffs or quotas. The country's economy minister tells Bloomberg the moment the U.S. says it will put a 20% tariff on cars, he's leaving the bargaining table. French presidential candidate Emmanuel Macron has opened up his biggest lead over Francois Fillon and has pulled within 2 points of Marine Le Pen. That is according to two of the latest polls that we've seen, Macron commanding a 25% piece of the French electorate. His surge is said to be pushing by increasing endorsements and Fillon's legal troubles. Both surveys, though, show Le Pen losing in the second round. Theresa May is preparing for battle in the House of Lords this week over her draft Brexit law. The British PM and her team have demanded that lawmakers in the upper house of Parliament not rewrite the legislation while debating it. Meanwhile, May remains opposed to a second referendum on Scottish independence. That's after a report that Scotland is preparing to call another vote. Scottish leader Nicola Sturgeon has repeatedly said another referendum is likely. And North Korea's secret police was involved in the killing of Kim Jong-un's brother. That is according to the New York Times, citing South Korean intelligence. The killing is being described as state-sponsored terrorism. Global news 24 hours a day, powered by more than 2,600 journalists and analysts in more than 120 countries. I'm Elisa Parenti. This is Bloomberg. It's just after 5:30 p.m. Monday here in New York, already 6:30 Tuesday morning in Singapore. We're joined by Bloomberg's David Ingles with a look at the markets. David, good morning to you.
Hi, Elisa. Yep, so we are feeling the tailwinds blow across the Pacific here in Singapore. Of course, it's looking good across the markets. I mean, you look at some of these early indications, it does seem we're going to be shaking off that fairly, dull session that we had on Monday. You look at futures for Japan, futures in Australia opens up, of course, in 30 minutes from now, pointing to a higher open. We have yields as well there over in Sydney, also higher. So, in other words, fairly risk on. Lots of data to latch onto for traders here. The big one is India GDP. Largely expected to really reflect the negative effects of the demonetization efforts late last year. We'll be watching shares of Takata when Japan opens up. The company, of course, pleading guilty to one count of wire fraud, and lots of solid interviews as well. I'm pretty excited about this one. We're talking to the president of Danish robotics company Universal Robots about this new wave of automation that's going on across industries and across countries here in the Asia Pacific. So lots to talk about today. I'm pretty excited as well. So I'm David Ingles in Singapore. More from Bloomberg Technology next.
This is Bloomberg Technology. I am Corey Johnson, and our top story this hour, Snapchat, parent company, which is called Snap, continues its roadshow. The highly anticipated IPO set to price on Wednesday after the markets close. Executives from the management team are continuing to pitch the company to investors and explain away its slowing growth. Joining us from New York, Alex Barinka, who covers IPOs for us, and is very excited about this deal. She's just very excited. Crawford Prete, also excited, here with me from IDC. You asked me during the break, but what's your take on this deal?
Yeah,
business?
Well, this is a tough one. I mean, Snap likes to say that they're a camera company.
First sentence in the filing.
First sentence.
Snap's a camera company.
And then they go on to talk about how they compete with platform companies like Apple and Facebook. And I would argue that Snap is an application company that's hit one use case, one key use case that one demographic is really interested in. But they're, like Twitter, struggling to add use cases. They're struggling to add features that will get that growth accelerating. That's the problem.
And to that point, I mean, Alex, you've been talking to people who are doing these road shows. I presume you talked to a lot of people who invest in IPOs, which is a particular kind of investor. What are they saying about this deal?
And Crawford's kind of hitting it on the head there. They are pitching themselves as being able to figure out the millennial generation and how to make money off of them. But even in their best use case, their only use case in the Snapchat app, people are looking at the slowing user growth at the end of 2016. They're looking at kind of the coming down of engagement metrics. Those are things that they are increasingly concerned about because, like investors do, they like to compare new stocks to past companies. And when you think about Snapchat, you also think about Twitter and you think about Facebook. And with Twitter, that was kind of the issue there. They didn't have a second act. They're still figuring that out, even 3 years plus since the IPO. That's kind of some of the overhang that's going on here. For the folks that are the bulls, the folks that are making a long-term bet on this company, they are the ones who think that the sales growth opportunity is really there, and they trust Evan and they trust his team to figure out what's next, and they're making that bet without a whole lot of information about what the next generation of snapping looks like outside of spectacles.
And Evan, she refers to Evan Spiegel, of course, the CEO, who's thought to be a great product guy, a guy who really creates. And Snapchat is a product that people love to use. Now, Warren Buffett would argue that anyone likes to use something for 50 cents that costs $1 to make. Yeah. But these negative gross margins, I mean, and Alex is right, I think, to compare it to Twitter and Facebook. But here's a comparison I'll give you. Facebook is profitable, has tons of free cash flow. Yep. Twitter has cash flow from operations but isn't exactly profitable. It continues to issue stock options willy-nilly. Yeah. And then Snapchat isn't even gross profitable, let alone operating profits.
Yeah. So you've got a tremendous amount of costs that they're incurring to build out this infrastructure, which, by the way, over some time, they may want to build out their own infrastructure, which is going to take a huge CapEx over time if they built out their own data centers. The thing I worry about is, are we talking about just this herd? And this herd of customers that's kind of moved to Snapchat, and then that same herd of customers will not
brought it over to Instagram.
Yeah, they'll and then in the last session you had with Sarah, you were talking about how basically was it when Facebook started adding features that the user growth started to turn?
So Instagram starts stories and user growth slows down. Let me show this. So we put it up briefly before. I want to get your take on it. So there's a chart I put together and it shows real simple math, costs of providing the service. Yep. And I just took the cost of goods sold and I divided by how many users I had each quarter. So you can see how much they have to spend on every single user. In any business in the world, that number is supposed to go down. You add more users and you have the economies of scale. Instead, what we see is that the cost per user is actually going up.
Right, because the herd is thinning. Because it's getting harder and more expensive to get to each member of the herd and to monetize that member of the herd. Explain to me how, if your growth is roughly the same in Europe as it is in the United States, and network costs are higher in Europe, it's going to be cheaper.
Is that what that's about? I don't know if we have that chart ready, but is that what that rising cost is about? It shows those numbers going up because they're expanding in places where it's more expensive to operate the service?
I don't know that. No, I'm talking about network costs. So actually using the network service if you're a customer.
So I see,
and
there's a chart there. So you can see it, 97 cents per user in the fourth quarter, when a year before it was only 61 cents to provide it.
Yeah, because it's getting more expensive to reach every incremental customer. And they blame it on a lot of things. They blame it on Android and the app not being as good, but really, I think it's just about getting to the more expensive person to get to.
And there's a quote from the SEC filing, something that was part of which was added, where it talked about what they're doing. Alex Barinka, this is one of your favorite tricks, which is to compare the amended offering to the actual offering. But we have committed to spend $2 billion with Amazon Cloud, and here's the part that's new, and have also committed to spend $1 billion with AWS over the next 5 years. That's $3 billion in expenditures they're on the hook for in this business that is losing money with every transaction.
It is, and Corey, as you said, this makes up the majority of their cost when you look at their cost of revenue. And we've heard questions about this on the Roadshow, and they did come out and say, which is new, that they would consider potentially doing their own infrastructure. There are no plans to do that right now. The company is trying to kind of explain this away by saying we're making all of these investments up front so that we can expand really quickly. But again, the proof will be basically in the pudding here. The revenue model is so new. It's only about 2 years that they've been making larger amounts of money than zero. And so in the next few years here, whether or not they can continue to monetize this user base, whether or not they can kind of really rev up revenue to a point where you're outpacing these rising costs, that is this kind of like phase 3 that the company talks about. And it's frankly one of the few kind of salient points that they point to as something to really look forward to from a financial perspective from Snap Inc.
She's Alex Barinka. She covers IPO for us. She puts the hot in the IPO hot sheet. She actually puts everything in the IPO hot sheet for Bloomberg News. We're grateful for that. Crawford Prete, also Chief Research Officer at IDC. Thanks a lot. All right. Well, now back to Barcelona, where the Mobile World Congress is underway. Bloomberg's Caroline Hyde caught up with Tom Wheeler, the former FCC chairman. Of course, he led the commission through the Obama era, established the controversial net neutrality rules, and his successor, Ajit Pai, a Republican, was vocal opponent, and now trying to unwind some of those regulations. Caroline asked Wheeler for his views on what's happening next.
It is highly dangerous to allow 4 companies, which is basically what we have in the United States, 4 internet service providers, to determine who will be able to get on their networks and to determine who the winners and losers, what are the special terms, I'll favor you, I won't favor you. We will not have the kind of economic growth, we will not have the kind of innovation that is necessary if we don't have networks that are fast, fair, and open.
I was talking to the Deutsche Telekom CEO, Tim Höttges. He has a foot in the US, with T-Mobile US. He feels that Europe has got a better way of doing things. Do you believe that as well? What regulatory systems can we learn from each other?
Well, it's interesting because Europe adopted their open internet plan after we did ours, and they based it on ours, and I actually came over several times and sat down and helped them work through it. So I think that they are very similar.
What could this do in terms of innovation? In terms of the Internet of Things, there is going to be so many more connected devices, a lot of them crucial to infrastructure, crucial to our own healthcare. How do you ensure, from a regulatory perspective, that the right data is flowing through the pipes?
Well, you got to make sure the pipes are open. I mean, we can't be sitting in a situation where somebody who owns the pipes is determining what's going on, what's going over those pipes, and because 2 guys and a dog in a garage are working on something right now that you and I have never thought about, that is going to be transformational and is going to use the power of ubiquitous connectivity and the power of ever more powerful and lower cost microchips to change things yet again. They need to be able to get on the network without permission. Not to be able to, can I get on the network? Or, I'm competing with one of your companies, Mr. ISP. What about my product? One of the things that, unfortunately, Chairman Pai shut down when he came in was an initiative that I had on what's called zero rating. Zero rating. There are some carriers in the United States who are using the fact that they control the network to favor their products over competing products. The Internet of Things will not grow if that is the reality. 2 guys and a dog in the garage won't be able to compete if that is the reality. We won't have the kind of innovation and economic growth that we need to have if that's what happens.
How, therefore, does the reality not become that? If we have the administration as it is, what needs to happen to ensure that net neutrality stays as and where you'd like it to be?
Well, the great thing is that we have a law in the United States called the Administrative Procedure Act, and it stipulates how regulatory agencies have to act. You have to build a record. You have, in a public record, you have to make a decision based on the record, and then a court has the right to review that record. Well, when we put out our open internet rules, we built an extensive record, and it was reviewed and affirmed strongly by the court. Whether you can come back in a couple of years later and say, oh, things have changed so dramatically that you need to reverse all those other decisions, those decisions that have been affirmed by the court. This is going to be a long process. And so, we'll see what the record is, we'll see what the court appeal is, and then we'll see where things end up.
That was FCC Chairman Tom Wheeler speaking with Bloomberg's Caroline Hodde. And tomorrow, Caroline's going to sit down with Wheeler's successor, Ajit Pai. So don't miss that, 7:30 in the morning, Wall Street time. Coming up, the latest chapter in the Samsung corruption saga. It's been grabbing the country's attention for months. Top executives await indictment. We'll discuss the tech giant may be able to move on beyond this probe, or is it just getting started? We'll see. This is Bloomberg. Huge story out of Asia could be reaching its final chapter. A special prosecutor in South Korea will make a final decision Tuesday on whether to indict Samsung executives, including J.Y. Lee, over bribery charges. Peter Elstrom, managing editor of Asia Technology at Bloomberg News in Tokyo. Who is J.Y. Lee, Peter?
Well, J.Y. Lee is the heir apparent at Samsung, of course. The broader picture here is that there is this investigation into influence peddling at the highest reaches of government and corporate Korea. A special prosecutor was appointed about 2 months ago and has been digging into these allegations about corporations giving money in exchange, allegedly, for political favors, including at Samsung. The special prosecutor had a deadline to finish this investigation by the end of February, so today here in Asia, had asked to extend that because it's a very big project and was denied the extension. So they need to file charges today. A spokesman for the special prosecutor said yesterday that of the 5 Samsung executives who have been identified as subjects, almost all of them will be indicted. So we're expecting that later on today here.
What are the ramifications? I mean, it seems that in the past, the executives of all kinds of the big Korean companies have been able to avoid prosecution basically by having these close ties with elected politicians.
Yeah, well, the political climate has changed quite a bit. You're absolutely right that in the past, the heads of chaebols have been prosecuted for a variety of things, including J.Y. Lee's father, and was convicted. They continued to kind of work at their companies in most cases and returned if they weren't able to continue. But the political climate has changed quite a bit. There's a lot of outrage about this kind of influence dealing at higher levels of government and business, and so the public is looking for some more serious measures at this point. You saw this when the special prosecutor sought not once but twice to put J.Y. Lee into jail as he continued his investigation. So that's where the heir apparent is right now. He's waiting for these charges, the indictments to be filed, waiting in jail.
It's a remarkable development for this company. I was hoping you would tell the story just how important this management team is, this company. It's not just like a CEO. I mean, the way they sort of worship this family at the company is amazing.
Right. Well, J.Y. Lee has been the focus of this, and Samsung is a very large organization. There are executives who run individual pieces of it, and the people who we've talked to at Samsung have said the CEOs of the individual businesses are going to be able to continue to run these operations. Where it gets more challenging is if you take out the top leadership, it's harder to make big strategic decisions about where they're going to invest the next few $1 billion into a technology that they think is promising, or if they're going to do an M&A deal that's going to cost several $1 billion. So those big strategic moves get much more challenging if you have top leadership distracted with this sort of thing.
Peter Elstrom, Bloomberg News managing editor for Asia, joining us from Japan. Thank you very much. We appreciate it. All right. Programming notes. Starbucks CEO Howard Schultz sits down with Francine Lacqua for a wide-ranging interview. Watch it Tuesday starting at 1 a.m. New York time, 6 o'clock in the morning in London, and throughout the day on Bloomberg Television. Also, SpaceX CEO Elon Musk announces a surprise mission to the moon. 2 unnamed space tourists have reportedly put down big bucks for a round trip. Those details next. This is Bloomberg. We call this segment Out of the World. Why? Because it's about space. SpaceX CEO Elon Musk says his company's going to launch, well, his space company's going to launch 2 space tourists beyond the moon. 2 passengers, private citizens. They don't want their identities disclosed yet. But the company says they've already paid a significant deposit for this space mission. Unanswered questions, there are many. Dana Hull from Bloomberg is going to help us answer some. What? The moon's passengers? SpaceX has never put a living thing in its rockets, as far as we know.
Correct. So, SpaceX was founded to send humans to Mars. Obviously, going to the moon is a little closer than Mars, so maybe this is sort of step one as they try to figure this all out. What's interesting is that this comes at a time when the Trump administration has signaled a lot of interest in also sending humans to the moon. And so part of this is maybe a marketing effort by SpaceX to kind of show the excitement around space and show to Trump that they could do it. Many years ago, when Elon and I were like this, we weren't actually really like this, but I did a story with him at the SpaceX headquarters in Hawthorne. We walked through the factory, and I looked at this capsule on that was going to be the top of the rocket, and I said, "What do you need a window for?" And he just gave me this grin that suggested that those plans were absolutely there to put people into space. Oh yeah, there were. I mean, and to be clear, SpaceX has a contract with NASA to send astronauts to the International Space Station, but this is private citizens. This is not astronauts. So while they're working with NASA to get certified to send Dragon crew to the ISS, they're announcing today that 2 people have apparently paid them a pretty significant sum to fly around the moon late next year. So Richard Branson's Spaceship 2, now they had a successful test flight last week out in the desert, and they're charging what, $250,000 per person? I think so. Should we try to guess what it costs to go around to the moon? Because that's for not a lot of time of weightlessness in Branson's. Right. I mean, I think what's different is SpaceX and Jeff Bezos' Blue Origin are talking about kind of taking people to space, letting them experience weightlessness, and then bringing them back. This is orbiting the moon, which is a whole different ballgame. And I mean, it could be, one analyst told me at least 50 million a piece. And there are plenty of people in Silicon Valley and Hollywood and elsewhere who have that kind of money who would love to be the first to do it. Would you want to go? Probably not. I find the notion vaguely terrifying, but maybe there are braver people out there. But well, there are people... SpaceX is talking about doing this on Falcon Heavy, which is a rocket that it has not yet flown. So it's like, we haven't even seen this rocket in the air yet. Yeah, fairly experimental stuff. Now, where are they in terms of sort of their satellite business? We know that they tried to launch something to connect with the International Space Station last week, right? What happened there? Well, I mean, they docked with the International Space Station. They did dock, okay. Yeah. They have a satellite office in Seattle where they're apparently building their own satellite network, but that hasn't been launched yet. They've been pretty quiet about that as of late. And what's their next big project? I mean, so they have several projects. The next sort of big moment for them will be they've landed the first stage of the rocket on land and on the drone ship several times, but they have yet to refly it. They're supposed to do that sometime this spring from Cape Canaveral, and then they've got to get Falcon Heavy in the air before they send humans. Really interesting stuff. I was glad to have you covering it for us, Dana Hull. Pleasure. From Bloomberg News and right down the hall. All right, that does it for this edition of Bloomberg Technology. Remember, all episodes of Bloomberg Technology are now live streaming on Twitter. Check it out at Bloomberg Tech TV. That's the hashtag. It's every weekday at 5 o'clock Wall Street time, 2 o'clock on the West Coast. That's it for now. This is Bloomberg.